right off the bat, then it is earnings season and HCL Tech has come out with its numbers. They have kicked off the earnings season, and with revenue and PAT actually beating the street estimates. Revenue is up almost 3% on a sequential basis, but the net income declined marginally. Now, the board has also announced a dividend of rupees 12 a piece. But to give you more perspective on the scorecard, I'm joined by Anisha Jain with all the number crunching. Anisha, take it away. Give us a snapshot of how the numbers are looking like for HCL Tech.
Well, actually, it's a very good show coming in from HCL Tech this time around, and the beat has been driven by top line itself. We were working with a constant currency growth of just 0.8%. The company has gone ahead and delivered a constant currency growth of 1.6% sequentially. That translates to a USD revenue figure of $3,445 million, up 2.4% quarter on quarter. Again, a beat coming in on versus our expectation. Even if you look at the rupee revenue, 28,860 is much better than what ET Now poll threw up at 28,450. That is actually getting trickled down to the operating performance as well. We were expecting an improvement in the margin. We were expecting that from 17.1, it will go up to 17.9. They've actually delivered a figure of 18.5, 18.6%. So a solid show on the operating performance driven by the top line beat, and the profitability too. Yes, it's declined on a year-on-year basis, or rather declined on a quarter-on-quarter basis, but we were expecting a decline. The decline is much lower than what anticipated. More importantly, the company has gone ahead and increased the lower end of the guidance given the strong performance that they had showed. In the earlier quarter, when they had reported a 1.6% decline, they had gone ahead on record saying that Q2 will be a growth quarter. And that's what they've delivered. Now the full year growth guidance stands at 3.5% to 5%. Earlier, this guidance was 3 to 5. So they've narrowed it a bit and upped the lower end. The margin guidance has been maintained at 18 to 19%. Even in terms of the people count, the net addition this quarter is a decline of 780, which has been the case for them. But they've added freshers, at least they're going to the campuses, it seems. The attrition stands at 12.9%. And just to wrap up, I just wanted to talk about TCV as well. The new deal wins coming at $2.2 billion, right in bang of the range that we were expecting. We were working with $2.3 billion thereabouts. So the number has come in closer to that. In fact, even if you go by the management commentary, CVK says that our pipeline is very strong, including data and AI, digital engineering. The Gen AI offerings have been liked by the clients and provides the growth for medium term. Shiv Walia, who's the new CFO, whom we are hearing for the first time, says that the EBIT margin improvement has been quite strong, and they have a dedicated effort to improve the cash conversion as well. So overall, good performance coming in from HCL Tech this time around. Let me welcome on board Sandeep Agarwal as well to help us make sense of these numbers. Sandeep, after TCS had reported a very sideways show, we were worried that perhaps the growth recovery has got pushed down. But do you get a lot more confidence having HCL Tech reporting a beat on top line and increasing the guidance?
Oh, yeah. Hi, good evening, and thanks for having me on the show. So I think, the numbers are quite decent. The expectation, it is around 30 to 40 basis points higher than expectation on the revenue front, and there is a marginal beat on margin also, and the company has actually upgraded the guidance to the extent they have beaten the guidance this quarter. So they are playing safe this time. I think, if you see Accenture numbers also, the outsourcing has shown very strong order book and growth, and same conclusion was there even in TCS numbers. So wherever there is a consultancy portion, there has been little bit of impact, but non-consultancy side has been doing phenomenally well. And I think outsourcing will do much better as we move forward, because remember, whenever there is a pressure on economy or there is a pressure on margins, even outsourcing increases. Because everyone wants to manage their own P&L, and outsourcing is the cheapest way to get IT contracts executed. So I think, numbers are quite decent, and the upgrade in guidance, all those things provide a little bit of confidence. But also do remember the stocks have run up quite a bit in last few months in anticipation of a recovery. So it will be very hard to comment whether from here there will be a substantial upside immediately.
So when you're saying it's difficult to call out the upside, are you specifically talking about HCL Tech or the entire sector? Because the underdogs per se are the Tech Mahindras and the pros of the world. Today, of course, the pro reacted to the bonus issue. But where within the large cap IT do you see the best risk reward?
So in the large cap IT, I think wherever there is a valuation comfort, like the names you mentioned, Techem and even to some extent HCL, I think there is some valuation comfort. So here you can still see some upside, but some of the market leaders, they have run up quite a bit, and I think they are trading at a fairly fair valuation now. So the upside there will be limited in the whole IT sector. If you see, most of the stocks have run up in last 6 to 8 months. So I will be little cautious wherever valuation is high. But except for ER&D, where valuations are very high, but still because it is a structural story for next decade or two, they can still do better from here as well.
Okay, point taken. But the two lead indicators of growth that we usually talk about, Sandeep, the deal win as well as, the head count, both continue to be soft. Yes, there is an improvement, but they're soft in the sense that the net head count is still a decline of 780. The TCV has come in at $2.2 billion, which isn't bad, but there's nothing to write home about either. Will that, you think, put a bit of a, semblance in place and people will become a bit more skeptic around those things?
No, see, this is also a factor of sharply falling attrition because, you plan well in advance how many to recruit and people join according to that schedule. And if the attrition is sharper, if the attrition is more than what you have projected, then, obviously the net head count will decline. Although attrition is on a falling path, but how sharp the fall is, that is also important in that. So I think that is the reason you are seeing some mismatch. So I will not read too much on the net addition number and order book because it is also cyclical in nature. But let me put it this way, I would reiterate that, a lot of positives of these numbers and the outlook are built in most of the stocks.
It's a beat coming in from HCL Tech, but one needs to be cognizant of the risk reward and evaluations here because the stock have run up 10-11% in the last couple of months itself, and hence the upside remains limited. Thanks, Sandeep, for making time and speaking with us today and analyzing HCL Tech's numbers. So, Ankita, just to wrap it up, it's a good show coming in from HCL Tech, both in terms of top line, which is driving an operating beat when it comes to the company's performance, and a bottom line beat as well. Good operating metrics when you look at the deal win and the head count as well. So overall, a thumbs up coming in for HCL Tech. Back to you.
All right. Thank you so much for joining us, Anisha. A thumbs up coming in from HCL Tech. Good set of numbers coming in for HCL Tech for Q2. But we will wait and watch on how the stock reacts in tomorrow's trading session to this good set of numbers that have come in.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.